You have 3 credit card statements sitting right here. One of them looks totally normal. Pay the minimum, move on. The second one, 0% interest through September. You've got time. The third one, 0%, but only if you pay the entire balance in full by June 30th. Every single dollar. Miss that deadline by $1, and the bank goes back to the day you made each purchase and charges you 18 months of interest you thought you'd avoided. That's not a late fee. That's not a penalty. That's the bank collecting interest you thought you'd escaped. All at once, retroactive on your next statement.
Most people don't catch that until it's too late. The language is in the small print. It is accurate, it is legal, and it is easy to miss when you're running a business. Today we're uploading all 3 of these statements to Claude, pulling out every term that matters and building a payment schedule that tells you exactly what to pay and when, so you don't get caught.
3 PDFs, 3 different rules, 1 place to see the whole picture. All right, let's do this.
We're on Claude.ai, standard browser. We're going to drag all 3 statements into one chat thread so Claude has the full picture for every prompt we run. All 3 are in. Claude has everything now: balances, transactions, and the small print on every card. Let's start with prompt 1.
Before we ask Claude to do any math or build anything, we need to confirm it actually read all 3 statements correctly. 3 different banks, 3 different formats, 3 sets of terms buried in the small print. If the extraction is wrong, everything downstream is wrong.
Our approach. Prompt 1 is not about math. It's about getting a clean, accurate read of what we're working with before we touch a single number. Here's what we're sending. I have uploaded 3 business credit card statements as PDF files. Please read all 3 carefully, including the small print and terms sections, and extract the following for each card. 1. Bank name and card name. 2. Statement period. 3. Current balance. 4. Minimum payment due and due date. 5. Standard purchase APR. 6. Whether a promotional financing offer is active, and if so, the exact type of offer. True 0% promotional APR or deferred interest. The promotional end date or payoff deadline. The exact condition required to avoid interest. And what happens if that condition is not met? 7. All transactions for the statement period. Date, description, amount. Present the results as a structured summary, 1 section per card.
Short, specific, and it covers everything we need before we touch the math. Send it. We're saving you from watching the model work through 3 PDFs of small print. Trust us. You're welcome. We'll pick it up when the results are in. So Meridian is straightforward. No promotion. 24.99% APR accruing right now on every dollar that isn't paid.
Crestview is the cleanest card in the pile. True 0%. Interest is not accruing in the background. There is no retroactive exposure, and you are not required to pay the full balance by September 30th to benefit. Whatever you pay before that date is interest-free. Whatever is left after that date starts accruing at 22.99% going forward. That's it.
So Crestview is the one you can breathe on.
Exactly. Now look at Pinnacle. Pinnacle is the opposite of Crestview. Interest has been accruing at 26.99% since the day every one of those purchases was made. It just hasn't appeared on a statement yet. Pay the entire balance, every dollar, by June 30th and it gets waived. Short by $1 and the bank applies every bit of that accrued interest retroactively, back to each original purchase date on the July statement.
And Claude flagged that on its own, right at the bottom there.
It did, without being asked. Crestview and Pinnacle both show $0 in interest charged on the account summary line. They look identical at a glance. Claude read the terms on both and flagged that they work completely differently. That's the thing most people miss when they're scanning a statement on a Tuesday morning between phone calls.
All right, so we know what we have. What do we do about it?
That's prompt 2. We're going to ask Claude to tell us exactly how to pay these, starting with the recommendation that works best for everyone, and then a priority order for anyone who can't pay everything at once. Here's what we're sending. Based on the 3 statements you just extracted, build a payment strategy for these accounts. Start with the baseline recommendation. Paying all 3 balances in full every month eliminates interest on all cards and is always the best outcome. Then, for anyone who cannot pay all 3 balances in full, provide a priority payment order that minimizes total interest paid. For each card in the priority order, explain why it ranks where it does, the specific risk or cost of deprioritizing it, and the deadline or ongoing cost the account holder needs to be aware of. Present this as a clear, ranked breakdown, not a paragraph of general advice.
Send it.
Claude is doing the math so we don't have to, and so you don't have to either. Results coming right up. Before we walk through the results, Claude flagged something right at the top, and I want to call it out. It identified itself as not a financial advisor and told you to treat this as an organizing framework, not a recommendation on how to allocate your cash. That's exactly right. We'll come back to that at the end of the episode. For now, that's the tool doing its job.
Baseline first. Pay all three in full every month, and none of this matters. No interest on any card, no deadline pressure, no math to do. That's the move if cash flow allows it.
And if it doesn't, here's where it gets useful. Priority 1 is Meridian. No promotional protection whatsoever. Interest is accruing right now at 24.99% on every dollar that stays unpaid. No deadline to plan around, no cliff to fall off. Just a steady, compounding cost that starts the moment a balance sits.
And Claude pulled the minimum payment warning right off the statement. 5 years, 4 months to pay off $7,200 at the minimum. Nearly $4,000 in interest.
That number came from Meridian's own statement. Claude didn't calculate it, it read it. Which is exactly why we start with an extraction prompt before we ask for analysis. Pinnacle is priority 2, and it's the one that keeps me up at night looking at this.
It should. Claude called it a cliff structure. Paying it down partially provides zero protection. Even $1 left unpaid after June 30th triggers the full retroactive interest, $680 to $920, billed on the July statement at the highest APR of the 3 cards. The only winning move is full payoff by the deadline. So you could pay $6,000 toward this card and still get hit if you leave $1 on it.
That's exactly right. That's the cliff. Crestview is last, and it earns it. True 0%. No interest accruing anywhere, no retroactive exposure, lowest standard APR of the 3. If you can't pay everything, Crestview is the card you carry.
That table is doing a lot of work. 3 cards, 3 different failure modes, all in one place.
That's what Prompt 3 is going to turn into a usable schedule. Right now we have the strategy. Next, we're going to ask Claude to build the actual payment plan. Deadlines, amounts, and what happens if you miss each one. In a format you can act on or hand off. Here's what we're sending. Based on the payment strategy you just built, create a decision-ready payment schedule for these 3 accounts. For each card include the current balance, the minimum payment due and due date, the recommended monthly payment to meet the priority goal, the specific deadline to be aware of, or note if there is no deadline, and the consequence of missing that deadline or failing to meet the recommended payment. Then add a final section, a plain language summary of what needs to happen in the next 30 days to protect this account holder from any interest charges. Format this so it can be handed to a spouse, bookkeeper, or anyone managing payments on behalf of this business. No financial background required to act on it.
Send it. Last prompt. Claude is putting the whole picture together. We'll have the full schedule in just a moment. Okay, that's not what I expected. It didn't just answer in the chat, it built a document.
This is something worth pausing on. Claude made a format decision on its own. It produced a formatted artifact instead of a plain chat response. And honestly, for this use case, it's a better output. The disclaimer is baked into the header. Each card has its own table. The 30-day action summary is at the bottom. It's genuinely ready to hand off.
So what do we do with it?
You have 2 options right now, and both work. Option 1, download it as a PDF directly from Claude. 1 click. That button is right there on the artifact. Print as PDF gives you a clean, formatted file you can save, share, or print. If PDF works for your workflow, that's all you need. You're done.
But if you want a Word doc, something you can edit, update next month, or hand to a bookkeeper who lives in Excel.
That's option 2. And this is where I want to show you something important about working with AI, because this is what actually happens when you use these tools day to day. The model made a choice about format. It's not wrong, but it's not always the format you need. And you can just ask for something different. Here's what we're sending. The document you just created looks great. Please reformat it as a Microsoft Word compatible output, structured with the same sections, tables, and plain language summary, but delivered so it can be opened and edited in Word.
Send it.
This is the part where you'd normally ask a freelancer to reformat the whole thing. We just typed 1 sentence.
Look at that. Same document, same structure, Word file, and it told us exactly what it did to get there. Viewed the files, ran the commands, created the output. No black box.
That's what a well-prompted AI workflow looks like. You describe the problem clearly, you verify the output at each step, and when you need something different, you ask. One sentence. The tool adjusts.
This is the part I'd actually put on my desk. 5 things. Plain English. No spreadsheet required.
Everything in that section came from the statements you uploaded and the terms Claude read. Meridian gets paid first because interest is running now. Pinnacle needs a payment plan started immediately because the cliff is June 30th and minimum payments won't get there. Crestview is last. Lowest risk, longest runway, no retroactive penalty. That's the whole workflow. 3 statements in, 1 usable document out.
And we did it without a spreadsheet, without a formula, and without calling anyone.
Before you download that file and act on anything in it, I need to say something, and I mean all of it. Nothing in this video is financial, legal, tax, or accounting advice. Not from us, not from Claude. We are showing you a workflow. Every bank has its own small print, its own rules, and its own exceptions that are not in this video. The cardholder agreement you signed governs your account, not what you see on screen here. Before you make any payment decision based on what Claude produced, read your full cardholder agreement for each card. Then call the number on the back of the card and confirm that your understanding of the promotional terms matches what your bank actually has on file. Those calls are free. The consequences of skipping them are not, and Claude flagged this itself. You saw it at the top of the payment strategy output. It called itself an organizing framework, not a financial advisor. That was accurate. The professionals in your corner are the ones who give you advice. AI gives you the framework. Your bank gives you the terms. A professional gives you the advice. Use all 3, in that order.
If your situation is more complex than 3 cards, multiple accounts, business credit lines, a backlog of statements you haven't looked at, there is nothing wrong with bringing in a bookkeeper or a financial professional. That's what they're there for. Today, we showed you what's possible when you want to handle it yourself.
The prompts from today are pinned in the comments. Copy them and run them on your own statements. And tell me what to automate next. Quick note, some content in this video was created or assisted by AI during production or demonstration. AI outputs are probabilistic and non-deterministic. Results vary between sessions. Always review before acting on them. All data shown in this video is fictitious and used for demonstration purposes only. Any resemblance to real businesses, transactions, or individuals is purely coincidental. All product names, logos, and trademarks shown or referenced are the property of their respective owners. Mentioning or demonstrating a product does not constitute endorsement.
You made it to the end. That means you're our kind of people.
Hit like, subscribe.
Subscribe so you don't miss the next one.
We're just getting started.
Okay, real talk for a second. I have a card in my wallet right now that I am about 80% sure is deferred interest. I've had it for about 14 months. Never read the agreement, never looked at the promotional terms. Just paid the minimum, assumed I was fine.
Do you know when the deadline is?
I do not.
Do you know the balance?
Roughly, not exactly.
So you might be carrying a balance on a deferred interest card with an unknown deadline and an approximate balance.
When you say it like that,
You know what to do.
upload the statement.
Upload the statement.